Hey, what's up, guys? So I just noticed that we have a bunch of brand new traders in the room that have absolutely no idea how to trade stocks or anything about trading stocks. And so I figured that I would make a really quick video on a couple of really basic things that I think will be very valuable to you guys. So I'm going to share my screen and we're going to go over this really fast. And Yeah. So the first thing to get into is I think is going to be the best thing for you guys is get into a program called Charles Schwab. It used to be a program called Thinkorswim by TD Ameritrade. I believe that there is no like requirement for money, and if there is, it's like $5 as long as you're in the United States. Um, I set my account up like 5 years ago, 6 years ago now. So it's been a minute. But when you get into Thinkorswim, we're going to kind of go into that really fast. Um, so it's going to look like this. It's going to look really crazy at the very beginning. Um, Revolt studies. It's just going to look like this. And I would imagine that when you first get into trading stocks, it's just like it almost looks like you're getting ready to shoot off into outer space. And so I want to go over a couple little basics for you guys and break this down as easy as possible. So when you guys first get started, everybody has every room, or when I say room, like every community has its own EMAs, which is the exponential moving average, which is like the average of like the last eight, nine, up to 200 candles. So these things are called candles, right? This green candle means that it opened here and it closed here. Then it jumped up, it opened here, it dropped all the way back down to here, shot up to here, and then closed here. That's why it's a green candle. This one opened, dropped down, shot up, and closed here. This one opened, dropped, shot way up here, sold back down, and closed here. This one opened at the top, popped a little bit, shot down, and closed back up. When you are trading stocks, especially at small cap stocks, like I don't know the exact percentage, but it's like 90% of stocks are going to go from a really low point to a high point and then end up closer to the starting point than it is the high point. Like I think it's 70% or something like that, 60%, 70%. And when you start using bigger share size, like you really don't need that big of a move. I mean, you get in, relatively close to the high, like anywhere really within here, you made a pretty decent amount of money because I mean this thing shot up and it failed. The lowest point was down here at $2. So a 50-cent move, on 1,000 shares, that's $500 on the day, Obviously that's absolute best case scenario. It's not going to happen. And like we're also only talking about 1,000 shares. So once you start scaling up, it can get a lot bigger. But the first thing that I would recommend you guys doing is just training your eyes. And the best way to train your eyes is to come in and find, oops, is finding tops that stand out. I call these like the ceilings. You want to find resistance points. And, the more the better. Just kind of get your eyes trained for it. And then you also want to find support, which is like the floor. And for me, what I like to look for is you see these long wicks See, I actually missed one because that's a really beautiful one. Like obviously this is like very, very early. So like these to me aren't like as important as the ones over in here. But like especially, like right here, there's one, two, like right next to each other. There's this one. You want to find like multi-touches. And so once you start finding um I want to clean this up a little bit actually. Clear drawing set, do that again. So like I said, I want to find the ceilings. This is perfect because it's a top, obviously. It's close, that's close. Now I want to start finding floors. And when I start finding the floors, I want to find places where they have like multi touches on and big wick ups like that. Because this is going to show you where the levels are. Like once the stock shoots up and it finds the ceiling, it's going to come back down and try to find a floor. Once it finds a floor, then it's going to bounce from the floor, go up to the ceiling. That usually acts as resistance, which it did. It finally broke through and then it comes back down. Finds a ceiling. Like a stock doesn't just go straight up and just keep going because that's what short sellers and profit takers are for. Stock would just go to the moon if there wasn't short sellers or people taking profits. Especially how small caps work in the game of small caps, because small caps are going to be completely different than big caps. Like I don't know what the actual percentage is, but I believe it's like 70% usually close red. And what that means is this opening level right here, it's going to close below that. So 238. Let's see if this thing closed below 238. Yes, it did. So if you would have literally just shorted at the very, very open, then when I say shorting, you're selling high and you're buying low. So you have to get short locates, and that's going to get really confusing. I'll go into much deeper detail later on. But basically, I want you to get on here, and if you guys have time, like which you should have time, if you're diving into trading stocks, you absolutely need to set aside time and come in here and get your eyes trained to find the floors and the ceilings. Start getting used to training your eyes to finding patterns and recognitions. Like for instance, like for me at least, this looks like head and shoulders. There's a shoulder, a head, and another shoulder. And for me, like it sets up perfectly. It's a high, a higher high, and a lower high. And that would be a good entry for a short sell. You have to start figuring out, what your eye kind of picks up on and being extremely selective. So I was talking to, sorry, my nose is super itchy, but I was talking to one of my students today, and this is gonna look a little crazy to you guys, but um I didn't take this because we were talking, and yeah, it hit the $2.50 area, but it didn't get into the golden zone. And the golden zone is what you're supposed to be aiming for in a gap and crap. And a gap and crap means the stock gaps from the low down here up to here, and it gives back a lot of its gap, right? This thing opens around 240. It gave back 40 cents. So what you're looking for is people that jumped in pre-market, they're going to look to get out, or they're going to sell more of their shares, or whatever the case is. But you want to be looking in here. He actually got in a little bit early. He got in over here. He saw this thing reject 250, and he jumped in. But for me, I was looking for in the golden zone, and that's just how I play it. The the next thing you want to be looking for is once you're in a trade, where you take profits at. I want to share this for you guys. That way, the more experience you guys get, the more you can start looking at how to do things. So this blue line is the average of the last 72 and 89 candles, and that's my first target. My second target is this yellow one. This is the average of the last 200. This is the average of the last like 350. It's the 5 minute on the blue line. This is this on the 5 minute chart. And then this is the last 1,000. And so I have different uh I have different targets. And that's literally all I use them for. For me, like, yeah, they're good indicators, but I'm not going to trade down off these indicators at all. For me, and how my style is, I prefer to trade up in the top range because this is where you're going to make all your money at. The closer I can get to $2.80, the better. I want, like, if this thing just kissed 280, I'm absolutely in that. Like, as long as I'm seeing the right stuff, I want to be in that because my risk reward is way better. You can load the boat up there. You can have more shares because instead of getting in down here at 255 to 265 and risking, 15 to 25 cents, I could only be risking 5 cents. So if I have a dollar amount that I'm risking, say $100. Okay, well, if you're risking, $100 and you have, like something realistic like 5 cents, you can go in with a much bigger size than you can with risking 15, 25 cents. So I feel like that's a very good place to kind of end that. And I'll kind of go into a couple different ways of how you can use Thinkorswim to where you can kind of get your bearings. You can go into the start here area. You see my three setups. And then I want to show you in the next video how you can use Thinkorswim to play these trades out in real time. So I will be back in the next one.